So, how long have you known Jeff McCloskey?
Jeff McCloskey
Yeah.
from New York Life.
Right.
All my life.
All your life.
Well, a lot of it.
A lot of
We
it.
met in high school,
That's right.
which is a long time ago.
Right? It seems like it. Yeah, absolutely.
It is a long time ago. Anyway, Jeff's here to talk to us because one of the things that happens is you're hitting the big 60.
Yeah.
Right.
Start thinking about retirement planning, what to do with your money, what to do if you don't
Long-term
have quite the
care.
money that you need. Yeah.
So whether you're set or whether you need to get some ducks in a row, today's episode's going to help, right?
Right.
And we're going to broadcast on StreamYard. StreamYard's a great platform if you're doing your own program online, right?
Yeah.
It's got all kinds of bells and whistles,
It
and
does.
it's
really
it's
easy to
cheap.
use. Yeah. It's great stuff. Yeah.
So here we are with our dear friend Jeff McCloskey, who knows pretty much everything there is to know about investing in money and
Yeah.
insurance and everything.
Good guy to know.
I've known him most of my life, and I wish I'd listened to him a long time ago.
Yeah, I do too.
Oh, you do.
That's not fair.
But anyway,
Yeah,
so we're talking about the things you really need to put together if you're approaching 60 or if you've already gotten there. And I know one of the big things Jeff talks about is planning, financial planning,
Right.
early,
Yeah.
right?
right. So, with the retirement end of it too, the closer you get to retirement age,
Retirement.
so-
What the hell that word?
whatever your age is, 65, 67, some people work into their 70s. The long and short of it is, as you get closer to that date when you're going to kind of hang them up, you really want to start thinking about having less market risk and more income, guaranteed income coming in, because you don't have the bandwidth to absorb a hit in the market. Like when COVID came around,
Yeah.
the market went down to 18.5. It's come back a long way though. But if you were actually going to retire in the first quarter or the second quarter this year, that would be a very scary event. My account was 200,000 and now it's down to 125. That's a big hit for somebody who's about to retire,
Yeah.
So
Yeah.
We've been there.
you don't have,
Right.
you need
Exactly. Yeah.
you really need to diversify away from market risk. And that's not saying you have to totally get out of the market, but what we want to do is we want to kind of true up the core expenses. And then once you true that up with some guaranteed income, you can afford to stay in the market a little bit more.
Went through that, right, with planning, helping your mom plan as she's looking at assisted living. I know we're going to get into that in a couple of minutes. But,
Right.
the idea is that by assuming less risk, and correct me, Jeff, if I'm saying it wrong, but by assuming less risk and shifting more to income producing investments, right? Now she's got some revenue coming in to take care of her expenses as she's
Right.
She's living off those investments,
Yeah.
not dipping into it, right?
Correct. And, just think about it. If you had a sizable retirement account and it took a big whack, that's less money you're going to have over the course of the rest of your life. So you just, we really want to make sure that whatever plan we're putting in place, it's addressing your basic core needs. And then depending on how, what you have for assets and what your goals are, you can stay in the market or, to a larger extent, or you can totally get out of it if the assets aren't there. But it's really, comes down to sitting down and making a plan.
He still hasn't talked about yachts.
Get off the yachts, will you? Who said we wanted a
To
yacht?
get on the yacht.
God's
Never mind.
sake.
Get off
What is
the yacht.
that
No,
about?
I don't even like boats, so it wouldn't matter to me. Yeah, let's talk a little bit about that idea. Most of us at this age, when we're hitting 60, and we've got a whole series on this, a lot of our focus is on helping our parents,
Right.
As they're approaching assisted living and home care and things like that.
And especially if they
Right.
don't have long-term care insurance, which I know you're
Mhm.
going to talk about.
Going to talk
too.
about in a second,
Yeah.
right? But the biggest
Right.
thing that we learned, right, is that right now, and probably we should have been doing it earlier.
Sooner,
but
yeah.
Right now, we should be thinking about those things, right, Jeff? We should be planning for long-term care and whatnot. Right?
Absolutely. I would say when that AARP card comes in the mail when you're age 50, that should be a big red flag to start thinking about it, because unfortunately, long-term care is not something you buy. It's like life insurance. You have to apply for it and then get approved. So, the older you get, the more chance you could get not qualify and be declined for it. So the earlier you plan for it and apply for it is better.
Does it cost more if you wait?
Yeah, is it more
longer?
expensive?
Yes. Oh, it's like insurance. Every day you wait, it gets more expensive.
Yeah.
It's cheaper the sooner you do it. The other thing too that's important is, without a long-term care plan in place, there's nothing that eats up retirement savings quicker than a health event.
Yeah.
Oh, amen.
We're actually dealing
Yeah.
with that kind of as we speak with my mom. I mean, mercifully, my dad provided really well for her, and she's got a very diversified portfolio, but she's got extensive care in the home, and it's
And a lot of that is,
insane amount
yeah,
of
a
money
lot of
per
people
week.
don't realize that stuff isn't covered by
Yeah, the
normal
Medicare
insurance.
doesn't cover it, and a lot of people
No.
don't know that.
And you're looking
I'm
at
going through. Yeah, I'm going through it with myself too. My dad's 83, and he's got like a $350 a day plan that's really helping out buffer some of the the pain experience. But he needs 24-hour care now. And my stepmother, who helps out a lot, had to go into she had an ankle injury that resurfaced, and she had to go into rehab for 2 weeks. So she had 24-hour care. So it's $24 an hour times 24 hours. It doesn't take a lot of thinking to see how much that is on a weekly basis. And if they didn't have that buffer, with the long-term care, their retirement savings could be going down drastically.
No, I hear you. I think on the low end, we saw that you're going to plan, if you need even care for part of the day, you're probably looking on the low end at about $2,000 a month and up to $15,000 or so if you need full-time care.
Yeah, because my mom's at about 12 hours a day, 7 days a week.
People over 60, in their older years who have a health event, they see it as a risk to themselves. It's really not just a risk to yourself. It's a risk to the loved ones that you have. Someone, without a plan in place, someone's going to have to step in and take care of you. And it's usually, a child.
Someone who just hit their 60s.
Right. Yeah,
Right.
Exactly.
I mean,
someone our age. Yeah.
And a lot of people don't have the discussion beforehand with mom or dad. Like, what happens if you have, an event, who's going to take care of you? You need to have the discussion with that person if that's the plan. Are they willing to sacrifice their time? I mean, there's all sorts of statistics. It's like average, like $7,000 a year out of pocket expense for that person who's giving, lost hourly wages. I mean, it's a big life changing moment for both people. So it's, the other thing too, that person who steps up and helps, we've seen where, it just breaks up families where there's a multiple children in the family. Someone who's taking care of mom is upset a lot of times because the rest of the kids aren't kicking in financially as much. And then a lot of the other kids who aren't doing the primary care, they're not there on the front line, are saying, you're not taking care of mom and dad enough. There's nothing that can split up. There's a better job than splitting up families than not having a long-term care plan in place.
Yeah. And they don't like the decisions that are being made. And we've got to, we've got to address this too, as we're doing this broadcast. I mean, we're right in the middle of this whole COVID episode, right?
Right.
And a lot of people that would normally step up like that aren't in a position to. I mean, people are losing businesses, people losing their jobs, people losing their homes. So if this stuff is in place, I mean, that's a lot of peace of mind. No?
Yeah, absolutely. I couldn't agree with you more. It's something like people go, how do you approach it? Right around the corner is Thanksgiving and Christmas time. We can get back together to some extent, but that's a great time to sit down with mom and dad and the rest of the family members who are going to be involved and say, what's our plan? At least know what the plan is, because nothing is worse than an event happens and now you're playing catch up and trying to make it work on the fly. And,
don't have the paperwork you need. And
no, I'm so glad you brought that up, because that goes hand in glove with what you were saying in our Taking Care of Mom and Dad program, right?
Yeah.
Have these conversations before the pressure comes.
And know what your parents' financial situation is way before an event happens. So you know whether they're going to be paying for it out of pocket or if they do have long-term care and what that's going to look like.
Now, what if the big event is...
Yikes.
Well, it's something you have to think about, right?
Jeez, I mean, okay, yeah.
And so we can't avoid this nasty, because here's the thing too, around, when you're hitting the big 60, a lot of us that had term life insurance, a lot of those policies are coming to an end, right? We have to find another option, something like that. And we do want to have something in place, or at least enough to stick us in the ground or put us on the funeral pyre, as I've elected. You can do it in the backyard. You can just throw me on. What a great way to go. Wouldn't it be, Jeff, to go to I hate to alienate anybody, but go to a Pats game and just be roasted on a grill. I think that would be a wonderful
that's like the
celebration.
I don't think you'd be too tasty, Jim, though.
Right? My God. That's the most grisly thing I've ever heard.
No, but you bring up a good point. Like, a lot of people think when they get to be 60 years old and their term insurance runs out, like, I don't really need insurance anymore. The house is paid off. The kid's college has been paid off. What do I really need insurance for?
What are you looking at me for?
Just saying. Yeah.
Or not, we could add.
Or not.
I'm going to give you just a couple examples that where insurance really comes into place for people over 60 years old. The first thing is everybody should have one. It's a basic final expense policy. It's going to cost you anywhere from $8,000 to $25,000 to put you in the ground, or in the urn if you choose to get cremated. There's usually side bills, ancillary bills that go along with someone whose taxes, these little credit card debt maybe to clean up, pay off the car loan. Maybe you wanted to have a big party, everyone can come celebrate.
Take a vacation, right? That's what you're going to do.
I'm going to go to Italy. See ya.
Everyone should have one of these in place. There's nothing worse when that event happens. It's like scrambling around. Who's got the power of attorney? Is there a power of attorney in place? Do we have to sell mom's car or dad's car? Do we have access to the bank account? If you had that simple policy in place, most insurance carriers, it's showing the death certificate and you have a check the next day. So you don't have to worry about paying the funeral home or, the crematory place or taking care of the side bills that go with it. It's right there. Yeah. The idea would be that you make sure the beneficiary is somebody who's going to be close to mom or dad and, they have access to money. It doesn't make sense to have someone who's cross country as the beneficiary because, you want someone who has.
You just hit a big one too. I don't want to lose sight of that.
I was actually going to just
go ahead.
tap
People
into
know
that.
where
Yeah, because
everything is.
Yeah,
right?
well, because my mercifully, my mom and I met with her attorney back in 2013, and she made me power of attorney, and I have access to all of her accounts, which was unbelievably valuable right now because
and you have no idea where any of my stuff
God.
is.
Yeah, I mean, no. I mean, I know where all that stuff is, but I mean, to get access to things. What?
You don't know where my stuff is.
Well, I don't care. You don't have any stuff. Come on. No.
Oh, that's a low blow.
I'm just saying. For my mom, the big thing really was, she was coming out of rehab and I had to have access to cash right away to get the care set up and all of that. And that meant I actually had to go into her portfolio and move some money around. Yeah. And, again, mercifully, we put all that in place years ago. So there was no, like, oh my God, what am I going to do?
We've been through it with people who have no idea.
And that's terrifying. That's a really, really bad place to be.
Right. So I would say anybody who's over 60 should definitely have a final expense policy to put into place just to take care of that those next few days. Paying the funeral home and taking care of the side bills. The next area, for people who accumulate a lot of wealth over their time, insurance can help pay estate taxes. Depending on the state you live on and your overall amount of wealth, you could be paying federal tax, estate taxes, or state taxes too. A lot of people use their life insurance policies to address those tax needs down the road. So their spouse or children don't have to pay the tax.
That's a really
tax
good,
bill for the same
really
thing.
point. Yeah.
Now the cool thing is we're gonna have Jeff back and we're gonna dig into these areas quite a bit in some future episodes. And so let's recap a little bit. So we've got the big three, right? The big three things you need to think about: retirement planning, long-term care, and some type of insurance plan. Is that fair to say?
That's the top three buckets.
Retirement planning and some type of long-term care in place, and insurance too. Insurance can meet those needs. Those retirement and the estate can help do that. There's all sorts. It comes down to the individual specific. There's all types of plans and strategies out there. My advice would be to find a good consultant to work with and put something in place. We have a saying in our office: a goal without a plan is just a wish. So
there you go.
You're just hoping that this is all going to take care of by itself. You really need to put some planning into place, and you need a competent, trustworthy, professional that you can work with.
Perfect segue.
Right.
Because we're sitting with one right now. So Jeff, how do people get in touch with you if they want to talk a little more?
In these COVID days, we're not allowed back in our office. We're hearing that we can get back in October, but right now I would say use my cell phone. 617-686-9466 is my cell, and you can also reach me by email. It's jmccloskey@ft.newyorklife.com.
can't be any easier than that. Jeff, you got any parting shots for people? If you had, because one of the things that we keep hearing now here at the Big 60 Life, again, because of COVID and some of the challenges that have happened over the last few years, we're hearing from a lot of people that they did everything right. They planned, they had all their ducks in a row. But now, because of the downturn, or especially businesses that are being closed, right? And people have pushed all their chips in to try to keep it going, try to keep their people employed, which is admirable, but they've eaten up all their retirement. So you're at 60 right now, you lose a business, what's the first step if you need to start over again at 60?
I think you need, if that's the case, you need to define, you're obviously going to have to work longer, but that's the thing with somebody who's never done it to begin with, or that scenario that you just mentioned happened. It's never too late to start. The idea is to get a plan in place, and then just start working to it on a regular basis. That's
perfect, because there it is. That's what we look at here, right? 60 is the beginning, not the end.
Yeah, exactly.
Right?
Yeah.
There it is.
Right. And it's never too late to start working towards a plan.
Jeff, thanks so much for hanging with us today and giving us good advice. We look forward to the next one.
All right, great. Thanks for having me, and good luck, everybody. Stay safe, and go Pats.
We just pissed off all the Patriots fans.
Yeah, I know.
With an NFL fan.
Well, looks like we've got some housekeeping to do, right?
Yeah.
You do.
I do.
You handle most of that. I bring the 30,000 foot.
Oh, I see. That's what it is. The 30,000 foot view. Yeah.
Right.
Okay.
But anyway, we're going to have Jeff back as a regular.
Yeah.
Right? He's going to dive deeper into some of the things we talked about, but we'd like to know what are your concerns?
What are you worried about? What are the things that...
Or just interested in.
Or the things that you're most interested in. And
we'll make sure we carve out some episodes just for that, right?
Absolutely.
So this is the part where you have to say, if they don't want to miss the episodes,
subscribe and hit the bell so you don't miss a thing.
Listen, we really appreciate you following the Big 60 Life, and we're having a blast bringing it to you. So we'll see you next time.